US markets are in extreme fear zone. S&P 500 and Nasdaq just posted another weekly drop. But is this fear an opportunity in disguise? Let's decode what the charts and sentiment data are trying to tell us. Hello and welcome to DK Global Market Insights. This week we are back with the weekly US market outlook where we will look at whether the market is finally bottoming out or more pain lies ahead. Let's begin with the big picture. S&P 500 has corrected by around 21.35% from its recent peak, while Nasdaq 100 has dropped over 25.5% despite a sharp bounce when the President Trump postponed the tariffs for 90 days, of course, except China. The momentum seems to have faded. Last week, both indices again moved lower. S&P 500 lost 1.5% and Nasdaq 100 declined by 2.31%. This brings us to the current market sentiment. The fear and greed index is now sitting at 21, squarely in the extreme fear zone. Historically, such low sentiment readings have often preceded short-term bounces. But let's see if other indicators confirm that. First, the market momentum is weak. The S&P 500 is currently trading below 125-day SMA, which is historically is a red flag, often coinciding with the deeper corrections or prolonged sideways movements. Next, the put-call ratio, 5-day average, is at 0.83, again reflecting extreme caution among investors. But there is an interesting part. The volatility index, that is VIX, has actually dropped in the last week and is now quite closer to 20-day SMA. And if this cooling in volatility continues, it could support a short-term recovery in the US stock market. So what should we expect next? Well, sometimes extreme fear is not a signal to panic, but is a sign of most of the bad news might have already been priced in. The next 4 minutes will take you to the charts of S&P 500 and Nasdaq 100, where we will identify key support and resistance zones, whether the price action suggests a bounce, and whether the market structure shows sign of bottom formation. Let us straight away go to the charts and begin our technical analysis. This is the monthly price chart of S&P 500 index. The index finally closed in the last week at 5,282.7. I would like to draw your attention on the historical price action. Whenever there is a correction in S&P 500, the price comes in the zone of EMA 21 and EMA 55 and takes support. We can see the multiple occasion. Even in the bear market of 2020, it has done the same. It has done it here, it has done it here, it has done it here, it has done it here. Once again, the price has come in the zone of EMA 21 and EMA 55, which is very significantly important observation to make on the price chart of S&P 500. Could this be a bottom of S&P 500? It looks so considering the historical price action. Let us go to the weekly price chart. What we see in weekly price chart, the similar kind of studies can be done. What we can see, whenever there is a correction, the price comes to SMA 144. It has come here and then made a new high. Probably this is happening the same what it has been happening in S&P 500 index. Let me superimpose some of the drawing. In the recent time, it has made the rounding bottom kind of chart pattern, and this two horizontal line represents the neckline area. If you see this trend line, price has taken support here, price has taken support here, price has taken support here. So it is an established trend line with a 3 touch points or more. Price once again has taken support here and bouncing from this important key support area. So based on the historical price action, this is the area where it has earlier resistance So 4,600 is a very, very strong support in S&P 500, which also has a support of dynamic support of SMA 200 and SMA 144, including SMA 233 as well. Now, this is the neckline of this rounding bottom pattern, which comes at 4,800. So we can say 4,700 to 4,800 is a good support in S&P 500 index. Now, there is one more important price action. Look at this candlestick pattern. The market gapped down and there was a recovery. And this level comes at 5,118. So this becomes the intermediate support in S&P 500. If we do the retracement analysis of this corrective wave, what we find, the price currently is trading quite in proximity of 38.2% retracement level. So on upside move, where will be resistance? Resistance would be in a zone of 5,600 to 5,620, which is nothing but the golden ratio with respect to this corrective wave. Now we are referring at the daily price chart. Since S&P 500 is currently trading in a downtrending move, because it is currently trading below all critical moving averages like SMA 144, SMA 200, SMA 233, EMA 21, EMA 55. So we need to have some kind of reversal chart pattern. What could be the potential reversal chart pattern? There are only two possibilities. One, I am drawing this trend line. So price may consolidate, hit that, again correct, and give a breakout. So it may form a inverse head and shoulder. This could be left shoulder, head in place, and the right shoulder may be under formation. Another possibility is price snaps back to test the another lower. Sometimes the second lower bottom is a lower than the previous one. So it can come to this demand area, then bounce back, and this is the apex area where we have a double bottom breakout. So probably it is consolidating, and my strong opinion, this seems to be nearly bottom, means 4,700 to 4,800, it has formed a good support base. This is the price chart of Nasdaq 100 index in monthly time frame. Here too we can see formation of a rounding pattern. This is a neckline area where the price has taken support. Can you see the current candle, which has a large lower shadow that indicates that the bears tried to push the price down. However, the bulls came in control and recovered the price. So this seems to be a very important demand area. 15,800 to 16,500 is a very good support area. So this is the weekly price chart. Earlier correction also we can see the price has taken support in proximity of EMA 55 and SMA 144. This is the neckline area. So the price is bouncing from a very, very important support area of SMA 144 as well. And the prior week candle is a bullish piercing candlestick pattern with a substantial rise in the volume. Where could be the potential resistance? If you look at this area where there is a multiple moving averages, EMA 55, EMA 21, volume weighted moving average 21 period. So 20,400 to 20,500 is an important resistance zone. While if you do the retracement analysis of this corrective wave, 19,900 comes at around 61.8% retracement level, which is nothing but the golden ratio. This is the daily price chart. We had a clear distribution pattern, double top formation. It gave a breakdown over here. So this zone near neckline is the supply area. So 19,900 to 20,400 is the supply zone in Nasdaq 100. Since it is also trading in a downtrend move, so we need to have a reversal chart pattern. Similar thing could happen here. Price may snap back to test the demand area, form a double bottom, and then give a breakout of a double bottom chart pattern, which is a reversal chart pattern. Or this could also form the inverse head and shoulder. So I'm drawing a trend line. So this could ultimately turn into a neckline. This could be the left shoulder, head in place. The price may consolidate and give a breakout of this neckline area to indicate the reversal in the market. If this video helped you to understand the current market setup, do like the video, subscribe and follow for more global market insights. Drop a comment below. Do you think that this is a temporary bounce, or have we found true bottom in S&P 500 and Nasdaq 100? Until next time, take care and trade smart.